Hello everyone and welcome to today's More Report. Chart appraisals on Thursday the 11th of May with me, Richard Brown, market analyst at Handset Markets. We've got fairly mixed open, nothing really doing in terms of direction on these equity markets again. Consolidation is pretty much set in now for the last few days really. Not really going anywhere on the European markets. Sort of DAX a couple of ticks higher, FTSE 1 tick higher, CAC a couple of ticks lower. So yeah, nothing really doing there. On the forex markets, you're seeing a bit of a consolidation really on the sort of big major pairs. Euro mildly higher, yen is very sort of clawed back a couple of few ticks against the dollar, but the sterling has just dropped in the wake of weaker than expected industrial production numbers for the UK, falling at 0.5% on the month, down to 1.4% on the year. That was missed estimates quite significantly, actually, and that has hit sterling just in the last few minutes. And what we've seen is some big moves actually on the Kiwi overnight, because we had the RBNZ as well. Sorry, I'll show you that for. Had big moves on the Kiwi from the RBNZ, and that came after the RBNZ sort of held monetary policy flat, but also sort of downplayed the inflation sort of forecasts. Pretty downbeat it was actually. Suggested that the RBNZ wasn't really going to be moving inflation forecasts, and effectively saying that the market had got it wrong. So Kiwi has fallen quite sharply, well over 1% lower there on the Kiwi today. In terms of the dollar, sort of mildly consolidating, nothing too significant in terms of direction. You had the Treasury yields, which have been sort of climbing in recent days, on the 10-year and the 2-year, just as a bit of a consolidation move today. Yeah, so nothing too significant there. Oil price is probably a big mover, or it is the big mover. You had bigger than expected inventory drawdown in the EIA inventories yesterday. I think 5.1 million barrels of drawdown on the crude stocks, and that helped to support the oil price strongly higher, about 3%, and it's gaining again today. You've had news that Algeria and Iraq are sort of supportive of an extension of the OPEC production cuts, and that an extension into the second half of the year. So it seems as though OPEC is moving that way, and that has helped to support the oil price, and that's why it's higher today. Now, in terms of what we've got to look forward to, Bank of England at 12 o'clock. It is Super Thursday, and the Bank of England is expected to keep rates flat at 0.25% and do no change on their quantitative easing. The Bank of England minutes at is sort of released at the same time, and it's expected to stay the same at only one member, which is Christian Forbes, voting for a rate hike. However, it'll be interesting to see how the bank sort of treats the forecast for inflation and growth, because growth has been a little bit subdued. Inflation has obviously been higher than expected, but also we've got the sterling rate that has picked up, so that should sort of help to mitigate some of that inflation further down the line. And it'll be as I said, it'll be interesting to see whether the Bank of England just basically just sits on its hands, really. I think it's going to be pretty much like that today. Now, further to that, we've got the PPI inflation data for the States at 1:30, expected to just dip slightly on the headline and pick up slightly on the core, but headline just rolling over a touch, still around about that 2.3, 2.2 level, and the core seems to be fairly sort of stable around that sort of 1.6, 1.7 level. So yeah, nothing major doing there for the inflation on the PPI data. We've got the CPI tomorrow, so watch out for that. But my chart of the day is the Euro Sterling. Now, Euro Sterling, I sort of looked at this with these big strong bear candles. It sort of broke below that support at 84 figure, and I was sort of looking at this and thinking, well, you need to be using that, I think, as a sell signal, really. And you're selling into strength, I think, on this Euro Sterling, because I think that sterling seems to be generally a more stronger currency than the euro. I mean, you had the euro jumping higher on Macron's first round victory, but that unwound yesterday to fill that gap. 83.86 was the high, and 83.80 was the low yesterday. So that gap has now been filled. Yes, you could argue of filling a gap, but can be considered to be quite a positive move, but I think considering it's sort of 2-3 weeks down the line, it's not really that way inclined. I think it's just basically that the Macron effect has been unwound really. Market is trading high yesterday. Sorry. Yes, the market is trading higher today on the back of that sterling weakness, on the back of the manufacturing data. But generally speaking, looking at these momentum indicators, I'd say MACD line sort of rolling over, stochastics falling, RSI sort of putting pressure towards the low 40s. I think this is a selling opportunity, this little rally. You've had the downtrend has been broken, yes, but I think, as I said, I think you're trading underneath all this old overhead supply, and I think it's just rallying into overhead supply that's going to give you another chance to sell. You've got this sort of opportunity around the 84.20 area, 84.20 to 84.40 sort of overhead supply, and I think you're going to continue to remain under pressure whilst trading below 84.60, and I think anything between hit sort of 84 figure towards 84.40 I think is a selling opportunity really. 84.50 pretty much being yesterday's high, Tuesday's high. So I think a little selling opportunity could be seen. Now you're going to get volatility with this as well with the Bank of England today, so it could be a bit more interesting. But generally speaking, I'd be using rallies as a chance to sell euro sterling, because it looks like, generally speaking, it's going to come back to retest that 83 figure support that continues to come in. So I wish you good luck in your trading today, and I will speak to you later. Thank you.